Intro. I hope you all went through linear programming. It's of course manageable. Good morning, everyone from the online. There are 15 people. No need, can manage. Less numbers, no. Any questions? You can put them forward. I can clarify the doubts if you have with regard to the what linear programming, not only linear programming. Mike. Like this. Give me a minute. Morning, everyone. Any questions, you can put them forward with regard to the what linear programming, limiting factor, throughput accounting, target costing, activity-based costing. No questions, no? As of now. Did you all get started off with some past papers and ACC Hub questions? Did you all start? You started, no? Super, excellent. How do you feel? Bit of a difficult. Yes, I can understand. But that is there. No worries, no worries. But each and every question will teach you, the past papers question will teach you new things for you to tackle the questions. It does not mean the same thing that will be tested, but when it comes to the question, since you have a sufficient knowledge with regard to the what particular topics as well as the what subject, I believe you would be able to what handle, right? Today's chapter is of course bit of a complicated one, but it's completely theory based one. But the exam question that you will be getting, totally numbers based. So numbers can be obtained by referring the theories. Slowly, very slowly, I'm going to explain to you with a number of examples. With a number of examples, each and every area, you try to thoroughly make sure the first theories. Then only when the question is tested via in the exam, you have to link that question to the theories. Then only you would be able to get the answer. Now itself, I'm telling you a little bit of a what challenging what task. We will work together. Then we can make it what happen. Also, in the exam, if you get a question as an OTQ, section A, only one question will be tested. If it is a section B, 10 marks question. Section C, 20 marks questions. So when it comes to 20 marks questions, at least some areas you can get the answers. Around 10 to 12 marks, it's straightforward. But only they will make you to confuse, twist, maybe what 7 to 8 marks. Bit of a long, calculation to be done. And some informations are not relevant to get the answers. Just to make you all to confuse, they may give you the what? Some additional information. Right? Therefore, be with the topics, you would be able to make it happen. Right? You don't worry about it. But first time, when you are, learning, you feel it's very easy. But I'm going to explain to you the theory. Then only be starting the what numbers. I'm pretty much sure that you would have got what my PowerPoint, additional PowerPoint with regard to the relevant costing. Yesterday I have uploaded them through the WhatsApp. I have sent them. They said that they will share it. Just check. Have I got? Have I got? No, no. Okay, I'll share to him. It is the which was I just made it as a more summarized one. The PowerPoint. It's easy for you all to understand. Emily, do you have any questions? No, he will be sending. I told him to. I told them yesterday night. Done? Problem.
Actually fill it to my number. So can you tell me your number? So
Yeah. No double. You have to start with 0094 679 6810. Just put the message as hi that I can send it to you. It's going. No problem. You just drop a message. I'll share with you. No problem. Right. Okay. I'll share you the more summarized form of what relevant costing in some time. No worries. Anyway, it has been already shared the detailed one. That is where in your study material, which I have already sent it to you all. But this is, of course, I just made it as a what more summarized form, right? Okay, let's Yes, I got. I hope you have received. Right. Right. Relevant first part, relevant cost comes under short-term decision making. It comes under what? Short-term decision making. First, you tell me what is meant by short-term? Less than a year. What is more important? Contribution is important. Emphasis will be on what? Contribution. Then what? Profit. Right. You said contribution. How do we calculate contribution? Very good. Sales minus total. Then all variable costs are relevant costs. Is that understandable first? Is that understandable first? Second one, do we take the decision based on the profit in short term? In the short term, do we take the decision based on what profit? No. How do we calculate profit? Contribution minus total fixed costs. Therefore, fixed cost is not relevant cost. Fixed cost is what? Not relevant, since this relevant cost is applicable for what? Short term. Clear? That is the example which I have given you with regard to the what? Relevant costing from the what? Definitions. From the what? Definition or from the topic perspective. It comes under short term decision making. What is exactly meant by short term? Less than a year. Important part is what? Contribution. How to calculate contribution? Sales minus all variable costs. Therefore, all variable costs are always relevant costs. We shall not take the decision based on what? Profit. Therefore, fixed cost is what? Irrelevant, or some people who call it as what? Non-relevant cost. Non-relevant cost. Excuse me, when I'm explaining, if you think that I'm fast, please just put a small tap on that. You know why? I want to make this part to be very clear to you all. If you think that I'm fast, please let me know under relevant costing. Is that clear? Right. Now let's come back to the what? Definition. What is the meaning of relevant costing? Relevant cost is a cost which is relevant for future decision making. Future decision making. By you are making decision, any cost that you are going to incur or any cost that you are going to change, any cost that you are going to incur in future. All future costs are what? Relevant costs. All future costs are what? Relevant costs. Going to incur or any cost that is going to change. I'll explain to you, no worries. Any cost that you're going to change would be known as what? Relevant costs. Or if I want to put it very simple definition, any cost which is what? Altering your decision. Any cost which is what? Changing your decision, which is always relevant. Any cost, if it is not changing your decision, which is what? Irrelevant cost. Any cost which is what? Supporting what? Your decision. By considering that cost, if you are altering your decision, which is always what? Relevant cost. That's the reason we said what? Variable cost is what? Always relevant cost. Are you clear? Are you clear? The definitions? Right. You remember I was talking about what? The detailed definitions. Detailed definition. What I said? By you are making decision, any cost that you are going to what? Incur or any cost what? That you are going to change would be called as what? Relevant cost. How? We'll quickly finish it with the fixed assets part quickly, right? Let's say you bought a machines. You bought a machine 10 years ago. 10 years ago. $400,000. You bought a machine when? Before 10 years time. For how much? 100,000. As a management accounting perspective, Any cost which has already been paid out, which is not relevant for future decision making. You know why? Under any circumstances, that cost cannot be what? Recovered. That cost cannot be what? Recovered. We call it as in management accounting, sunk cost. S-U-N-K, sunk cost. Second example about what irrelevant cost is what? Sunk cost, which is not relevant for decision making. The example for the sunk cost, sometime you would have done the payment for the research and development. Before you start the project, you will be doing a feasibility study. When you are doing a feasibility study or feasible study, you will have to make the payment to the what? Research people. You will have to make the payment to what? Research people. So let's say you got the research report. The report says what? Don't start this project because this project is going to give you what? Loss. Will you go and dump your money? You won't. Now can you go and ask from the research department? Since I'm not going to what? Undertake that project, therefore give me my money back. Will they pay you? No. Therefore the sunk cost, which is not relevant. Is a management accounting perspective, any past cost which is not relevant for decision making. But the life cycle costing, bit of a different. It is applicable only for what? Life cycle costing part. But we took it to the account, everything. Correct? So overall management accounting perspective, we shall not take the what? Sunk cost, which is not relevant for future decision making. Is that understandable? Now you bought a machine 10 years ago for 100,000. That 100,000 is what? Sunk cost, which is already paid up. Now every non-current asset has what? Economic lifetime period. Do you all agree with me? Every non-current asset has what? Economic lifetime period. Let's say this is what? 10 years time, economic lifetime period. Right? Now you have two options. Now the machine's what? Lifetime is over. Machine's lifetime is over. Now you have two options. You can go for a new machines. You can go for a new machine, which would be $120,000. Correct? Or you can use the existing one by doing some repairs and modifications. Repairs and modification. You will incur the cost of what? $5,000. You can use it for next couple of years. Are you clear with my example questions? Informations? Now my first question. What is the relevant cost if the company wants to go for existing machines? Very good. Only if you are going to go for existing machines, that 100,000 is not relevant since that is already paid out. The company is going to incur only 5,000 with regard to the modification. Therefore, that is a relevant cost. Same information, I'm changing the requirement. What is the relevant cost if the company wants to go for a new machines? The cost of the new machine, which is what? 120,000. Are you clear? Now let's go back to my definition. Relevant cost is a cost which is relevant for future decision making. By you are making decision, any cost that you are going to incur or any cost that you are going to change would be known as what? Relevant cost. Or any cost which is what? Altering your decision, which is known as what? Relevant cost. Clear? Another example. Let's say today morning you are planning to come for the classes. You had two options. One option, you can come by what? Your own vehicle. Do you all agree with me? Or you can come by what? Public transport. You can come by what? Public transport. That is what? Bus or metro or what? Local train. What are the costs which is relevant to come for the today's classes? My first question. Bus ticket, is it a relevant cost or not? It is relevant, of course. If you are coming by your own vehicle, fuel expenses, relevant or not? Yes, of course, it's relevant because you'll have to pump the fuel. RC, we call it a RC now here. RC has to be renewed every year. RC book. Or once in a lifetime. I don't know. Every year, like a license, no, that is. 5 years. Okay. Is it a relevant cost for today's class? It is not relevant. It is applicable for what? 5 years. That is not relevant because when you are taking a decision, just have a look once again. When you are taking a decision whether to come by your own vehicle or what? Public transport, what are the costs which is relevant? Bus fare is what? Relevant cost. You will compare the bus fare with what your fuel expense. Therefore, fuel expense is also what? What are the relevant costs? But you won't consider about what? RC or what? License. That is what? Not relevant. Even for the insurance, it's not relevant for a day. Am I correct? So that's the kind of idea regarding what? Relevant costs. Is that clear? Is that clear? Still we are at the definitions. We didn't start the what? Example. We didn't start the what? Example. Let's get started. Let's get started with the example first. First example is, as I have clearly explained to you, what all variable costs are always what? Relevant costs. Since it comes under what? Short-term decision making. In the short run, contribution is important. How to calculate contribution? Sales minus all variable costs. Clear? Second one is opportunity cost is always what? Relevant cost. What is meant by opportunity cost? I'm expecting you to give the what economic definitions for opportunity cost. But you are correct. All your answers are correct. But whenever you write down the answers with regard to the opportunity cost, you should give the crystal clear what definitions. Opportunity cost. Contribution lost from the next best alternative foregone. Do you agree with me? Loss of contribution from next best alternative. It's given there in my additional PowerPoint. You can refer all the notes. You don't have to worry about that part. That is what is known as opportunity cost. Opportunity cost in management accounting is always relevant cost. We will be discussing that part in detail when it comes to the relevant cost of the material and the relevant cost of the labor. Say for an example, currently, this is RUPro conducting ACCA program, right? They have a limited lecturers, correct? Listen very carefully. They have a limited lecturers. Currently, all the lecturers are occupied with this ACCA program. They don't have any excess lecturers, surplus capacity. Now, RU program has signed the agreement with another, professional body. Let's say Australia CMA. They have signed the agreement. We are going to launch a new program. That is what CMA from next month onwards. We have already signed the agreement. By hook or crook, we are supposed to what? Start that. Because we have already signed the agreement. Now we are trying to search the lecturers we are in the market. There's no lecturers we are in the market. Now we have only one option. What is the option that we have? We'll have to divert the ACCA lecturers to what? CMA Australia. If we do so, what will happen to the ACCA? We will stop off doing what? ACCA. If you are going to stop off what doing the ACCA, we will be losing the what? Contribution. But we think we are going to make a profit of 100,000 through what? CMA. But at the same time, we'll have to check how much we are sacrificing from the what? ACCA when we are diverting the lecturers from what? ACCA to CMA. Let's say we are losing the contribution of what? 150,000 from ACCA. Then what? No point of starting what? CMA. You know why? Lost contribution is how much? 150,000. Lost contribution is how much? 150,000. But we are going to get the new contribution only how much? 100,000. What is meant by opportunity cost? Lost contribution from next best alternative foregone. Therefore, this 150,000, how much we are sacrificing is very important to take a decision whether to start the CMA or not. That is applicable only when if we are dealing with the opportunity cost. Sometimes we don't deal with the opportunity cost. We may have what? Sufficient lecturers. Then there is no opportunity cost. We'll go with the what? As usual process. You got my point. I can tell you another best example with regard to the opportunity cost. You already bought a, we'll be discussing this part. You already bought a material to make a product A. So let's say butter cake. I would use that example only over here. Let's say you bought a wheat flour to make what? Butter cake. So that is where in the store. Let's say 1 kilo. It's easy for you to understand. Let's say 1 kilo. You bought a 1 kilo of wheat flour to make one cake. One cake. You already paid to your supplier 100 rupees. You already paid to your supplier how much? 100 rupees for that 1 kilo. Now that is where in the store. Now you are planning to what? Start your production process. Now you check the market. You check the market. There is no market demand for what? Cake. Butter cake. There is no market demand for what? Butter cake. As long as if you knew the market demand, will you go and produce that product? Will you go and make that product? You tell me the truth. You knew in advance there's no market demand for what? Butter cake. Then you won't produce butter cake. Clear? Now the wheat flour what you have bought already from the supplier can be sold out. Agree with me? Can be sold out. Can be sold out to what? Third party. But sometime you can't sell for the same price what you bought from your supplier. Obviously that will be what? Less than what you bought. You bought for 100 rupees. Now you can sell for only 90 rupees. That value we call it as, remember, scrap value. That 90 rupees we call it as what? Scrap value. Another name is what? Realizable value. Another name is what? Residual value. All three names are what? Same. Once again, I'll go back to my example. What is exactly meant by opportunity cost? You are planning to what? Make what? Butter cake. To make butter cake, let's assume one type of a raw material. You bought a raw material from your supplier 1 kilo, where it's in your store. Now company has taken the decision not to make what? Butter cake, since there is no what? Market demand. Clear? Now that wheat flour can be sold out for third party for $90, 90 rupees. The amount that you can sell, which is known as what? Scrap value, residual value, or realizable value. All are same. Now my questions. All of a sudden, you got a new order for chocolate cake. You got a new order for what? Chocolate cake. Let's say 1 kilo, say for an example, 1 kilo. Now, what you have already bought 1 kilo of that wheat flour can be used to make what? Chocolate cake. Do you all agree with me? Now, what is the relevant cost over here? What is the cost which is relevant when you are using that wheat flour to make what? Chocolate cake? Is it 100 or some other? I'll go back to the example once again. Just listen very carefully. I'm just explaining still the opportunity cost. What is meant by opportunity cost? Loss of contribution from next best alternative foregone. You bought a wheat flour to make what? Butter cake. Right? You pay to your supply. Let's take 1 kilo. It's easy for you to understand. 1 kilo. You pay to your supply 100. That is not relevant. Why? It's already paid out, which is a sunk cost. Now it is where in your store. Now you check the market demand. There is no market demand for what? Butter cake. There is no market demand for butter cake. Now you thought of what? Selling that what? Wheat flour. You no point of what? Keeping that wheat flour where in your store. No. You can sell that wheat flour for 90 rupees. That is what is known as scrap value. Meantime, you would have got a what? Sudden order for what? Chocolate cake. You got a new order for what? Chocolate cake. Now company has a plan to use what? That wheat flour to make what? Chocolate cake. If you are taking that material, which is what? Wheat flour to make a chocolate cake, what is the opportunity cost? Very good. How much? What is the loss of contribution? In case if there is no chocolate cake order, what you would do? You will sell that wheat flour for how much? 90. Since you are using that wheat flour for what? Chocolate cake, the scrap value, the residual value or realizable value as an opportunity cost, which is $90. Is that understandable, online students? Is that understandable? Very slowly I'm explaining. What about others? Emily, Karishma, Malavika? Right. Let's go back to once again the heading. Relevant cost, the cost which is relevant for decision making. By considering any cost, if you are changing what your decision, altering your decision, which is known as what? Relevant cost. First example, we talked about what? All variable cost are what? Relevant cost, because it comes under short term. Short term, the contribution will be more important than what? Profit. How to calculate contribution? Sales minus all variable cost. Then we talked about what? Second relevant cost is what? Opportunity cost. Opportunity cost is what? Always relevant cost. Opportunity cost is what? Always relevant cost. What is meant by opportunity cost? Loss of contribution from next best alternative foregone. Whenever you take a decision, you always should check with the what? Opportunity. That is always what? Relevant cost. Are you clear? Second one is avoidable cost is always relevant cost. Avoidable costs. What is meant by avoidable cost? I will give you two examples for that. Listen very carefully. The cost which is avoided by making a particular decision. How much the cost that you are avoiding is known as what? Avoidable cost. How? Say for an example, currently you are doing your production process completely labor force by using a labor force. Now company has a plan to introduce a machines, which is what? Automations. Introducing a machine instead of what? Labor force. If you are going to introduce a machines, labor will be redundant. Do you all agree with me? What is the cost that you are going to avoid? Which cost that you are going to avoid? When you are introducing a machine, which cost will be what? Avoided. That is what? Avoidable cost. That is always relevant. How much the cost that you are avoiding? Are you clear? That is always what? Relevant, whether to introduce a machine or not. Now I'm going to take you to another very important example. Listen very carefully. What is exactly meant by avoidable cost? Most often, avoidable cost which would be treated as a relevant saving, not the relevant cost, relevant saving. I can prove it to you. Just have a look. Let's say you are making a tablets, paracetamol. You're making what? Tablet, which is what? Paracetamol. You're making paracetamol. To make paracetamol, you bought chemical. Because the drugs, to make drugs, it will require what? Chemical. You bought a chemical from what? Your supply. Is that clear? Clear? Right. You bought for, let's say, this chemical you bought for $1,000 to make what? Paracetamol. Before you make the production, you buy the what? Raw material. Now it is behind your store. Now you check the market demand. There is no market demand for paracetamol. There is no market demand for paracetamol. Then you will check the another option called which? What? Scrap value. Am I correct? But this chemical cannot be sold via in the market. Nobody is willing to buy this chemical. But after some time, maybe what? After 1 week or 2 weeks time, it will get expired. But this chemical will get what? Expire. This chemical has to be what? Disposed. After it is getting expired, which has to be what? Disposed. What is meant by not disposal? Disposal is different from what? Disposed. What is meant by dispose? You will have to burn it. You'll have to throw it out. You'll have to take it from what your store and you'll have to put it to somewhere and you'll have to burn it. That is what is known as dispose. If you are going to dispose, are you going to incur the cost or are you going to get any income? Cost. Agree with me? Let's say dispose cost is 2000. Are you clear with the example? Are you clear with the example? Dispose cost is how much? $2,000. Now that is the one and only option that we have at the moment because we already both the what chemical we already paid out what $10,000 to what our supplier. That is what sunk cost once again because already what paid out. Now there is no market demand for what paracetamol. The company has taken the decision not to make what paracetamol. Then as usual go for a what second option, which is what can I sell that chemical? But the chemical cannot be sold out. It's a what specific chemical, specific item. But this chemical after some time it will get what expire. Therefore, this chemical has to be what disposed. The cost of how much? $2,000. Clear? Same company, all of a sudden, they got a new order for another tablets. New tablets. Let's say placebo. That is similar type of paracetamol. We are in UK. Placebo. New tablets. Correct? Now company can use this chemical. They can use this chemical to make what? New tablets. What is the cost which is now avoided for the company? How much? Yes, very good. How much? That 2000 disposed cost would be what? Avoided. That is basically relevant saving for the company. Do you all agree with me? That is what is known as avoidable cost. By making a particular decision, how much the cost that you are avoiding. By using this chemical to make what new tablets, the disposed cost which would be what? Saved. If there is no placebo order, new tablets order, what you would do? You will have to go for a what? Disposed. So if you are going to dispose this chemical, you will incur the cost. By using that chemical for the what new tablets, you're saving what? That disposed. As far as the company is concerned, that will be not relevant cost. It's a what? Relevant revenue, income for the company. End of the day. That should have been what? Set offs again what? Relevant cost. Are you clear? Only we have completed 2 examples under relevant cost. Whenever the examiner's question is given, we should relate that part. Under which category this example is what? Falling. Based on that only we'll have to take a we'll have to get the answers behind the exam. Are you all clear? Malavika, Karishma, Umar, Srivatsa. Don't get offended by when I'm reading your names. Thank you. Third one is differential cost or incremental cost. Differential cost or incremental cost. That is always relevant cost. Or differential cost. It's always relevant. Listen very carefully. How much the cost which got what incremented, right? Let's say currently you are doing a business. In your business, currently you are making a profit of what? $50,000. You're making a profit of how much? $50,000. Now you want to expand your operations. You want to what? Expand your operation. For the expansion, you will make an investment of what? 1 million US dollar. Right? If you expand your business, your profit would be 70,000. The new profit would be 70,000 by doing the what? Expansion. Clear? Now, what is the relevant cost? Is it 50,000 or is it new 70,000 or is it difference of or increment of this 20,000 by doing the expansion? Because that 50,000 is already there. Whether you are expanding your business or not, that 50,000 is already there. By doing the expansion, 50,000 will become how much? 70,000. So through the expansion, you are getting the additional benefit only how much? 20,000. The incremental cost is what? Always. How much? The amount which got what? Increment. That is always relevant. Because most of the, investment appraisal, long-term decision making where in the management accounting, maybe you will be discussing, but in next level, I think it's financial management, right? Or sometime that is small part will be where in the SPL as well, SPL, investment appraisal. Most of the investment appraisal which should be done based on the what? Incremental approach. There are two approaches. The name itself is suggesting two approaches. One is a normal approach, another one is what? Incremental approach. Because our investment, 1 million investment, extra investment, our benefit is only how much? 20,000, not the 70,000. That is applicable for short term ones. Whenever you do any activities, how much the amount which got what? Increment. Say for example, another example. Let's say you are going to produce a product. To produce a product, you need machines. You need a machine to produce a product. You have two options. One option, you can go for a new machines, right? Which would cost, let's say, $15,000. Or you can hire a machines, right? For next 5 years. You can hire a machine for next 5 years. But if you buy the machine also, that useful time is what? 5 years. That is the assumptions. Otherwise, you will check that part as well, right? If you are going to hire a machine, the cost is only 13,000. If you are going to hire a machine for next 5 years, the cost is only how much? 13,000. My question: will you buy a machine or hiring a machine? Why you took the decision as hiring a machine? Due to the differential of what? 2,000. Do you agree with me? That 2,000 is what? Incremental or what? Differential. That is always relevant when you are taking a decision. Are you all with me online? Very slowly I'm teaching to you. I know this what very complicated question that you will be getting where in the exam. What to do? You have to face the challenge. Right. Again, go back to the heading. The relevant cost is a cost which is relevant for decision making. All variable costs are relevant costs. All opportunity cost is what? Relevant cost. Then we talked about what? Avoidable cost, which is about saving for the company. It's a relevant revenue for the company. Next one, we talked about what? Incremental costs. That is also what? Relevant cost. Correct? Right. Directly at, because the fixed cost is not relevant. Do you all agree with me? Fixed cost is not relevant for future decision making. But if it is a specific fixed cost, or what? Directly attributable fixed cost is always relevant cost. I'll explain to you, no worries. Right. So the best example about fixed cost is what? Rent. Do you agree with me? Rent is the best example about what? Fixed cost. Fixed cost is what? Not relevant. Say for an example, Arivu Pro currently paying rent 500,000 rupees INR, right? For this building, they are having ACCA class, right? CA class, and they are having what? CMA class. Same building, they are conducting what? These three programs. By paying how much the rent? 500,000. Now, RU Pro is having a plan to start a new program. Let's say SEMA. They are going to launch what? SEMA. If they are able to conduct SEMA classes in the same building, that rent will become a what? General fixed overhead, which is not relevant. Whether you are conducting the SEMA classes or not, that 500,000 to be paid. Agree with me? Agree with me? Whether you are having the class or not, that 500,000 is there. Therefore, that is what? General fixed cost. Let's say currently all the classrooms are fully occupied with the what? Existing program. If you want to start this new program, SEMA, you need to hire another what? Story or another floor or another building. If you are going to hire a new building, that 500,000 will become, let's say, 650,000. Now this 150,000 extra you are going to pay with regard to the what? New program. That fixed cost is known as what? Specific fixed cost. Directly attributable fixed cost. When you are taking the decision, that fixed cost 150,000 should have been taken to the account. Because that you are going to pay that 150,000 with regard to what your new product. Are you clear with the specific fixed cost? Are you okay? But at the same time, once again, I'm telling you, if the new programs can be conducted the same building, then that 500,000 is a what? General fixed overhead, which is not relevant. Why do we say not relevant? Whether you are having SEMA class or not, that 500,000 will be there. But here, you are now what? Rent is going to what? Change. You remember that? The definition. Any cost which is what? Changing your decisions, which is known as what? Relevant cost. This now 150,000 is what? Changing. That is what? Relevant cost. Are you clear? Are you clear? These are the example with regard to the what? Relevant cost. Relevant cost. Now let's talk about what? Irrelevant or non-relevant costs. Or what some people call it as what? Non-relevant. Right, just have a look. What is meant by non-relevant or irrelevant cost? The cost which is not relevant for decision making. Already I have discussed with regard to the what sunk cost. Do you agree with me? Sunk cost means what? Past cost. The cost which has already been paid out. Therefore, it is not relevant for future decision making. Second one is what? General fixed overhead. Since we are taking the decision based on what? Contribution. The fixed overhead is what? Not relevant for future decision making. Clear? Third one, committed cost. What is meant by committed? Obligation to pay for exist. You already what agreed. Whether I'm going to use or not, that amount will be what paid. Obligation is what already there to pay for exist. The best example, loan, lease payment, loan, lease payment. Commitment is already there. Committed cost. I can tell you the very practical example for you all. Let's say you promise to your wife, every month I will pay you 10,000 rupees. Every month I will pay you what? 10,000. You promise. Oral agreement is there. Now it get what? It got what? Divorce. Still, you are supposed to make what? 10,000 payment to what? Your ex-wife. Since what? You have already what? Promised. Whether you are with her or not, that amount to be what? Paid. That is what is known as committed cost, which is not relevant. It's already what? Agreed. If you want, I can tell you another best example. Let's say you bought a lorry. You bought a lorry to do a haulage business. Do you know what is meant by haulage business? Haulage means transport company. Transport company. You know, from Chennai to what Bangalore. You are having a what transport business, right? Now you bought that lorry to do a what haulage business, transport company, and you bought that lorry for what 5 years lease. You promised to what lease company every month I will pay X amount. After a couple of years, you found this business is not giving you profit. Then you have taken a decision not to what continue with what this business. You thought of what winding up what your business. Since you are going to wind up your business, can you go and ask from what your lease company? I'm not going to pay what your lease amount since I'm going to wind up your business. Next day they will come and seize your vehicle and go. Do you agree with me? Whether you are having the business or not, that committed cost is what already there. That's the best example is what loan payment, lease payment, interest payment, interest payment. These are committed costs. Clear? Is that understandable? Last one, notional cost. Anybody who knew what is exactly meant by notional cost? But I have a small disagreement with what your study text and my opinion, because they say the notional cost is similar to the non-cash transaction. But I can I can give you all the two different examples for that notional cost and the non-cash transaction. But they say in your study text, even your past papers, they say notional costs are similar to the what non-cash transaction. But anyway, it's a non-cash transaction. So the notional cost should have been given what in the different way, because if the notional cost has an opportunity cost, then it will be converted as an opportunity cost. Therefore, it cannot be treated as a what non-cash transactions. I can tell you everything. The whole explanation I'll give you, but at the end we try to go with the, what our study text, what they say, because we'll have to get the marks where in the exam. First, I'll give you the definition. Yes, Priyanka, that is what it's given where in your study text. Your answer is correct. Is cost of using a factor of production that Yes, Srivatsa, very close. Excuse me. First, I'll give you what is meant by notional cost. No cash inflow and no cash outflow. You won't receive cash and you won't pay cash. That is what is known as notional cost. The best example, just have a look. Let's say you are doing your business in your own building. You are doing the business in your own building. But based on the accounting perspective, separated concept that you know. I'm not going to join the separated concept with the what management accounting here for the time being, right? Here what I'm telling is, you do your own business in your own building. Will you pay rent for that? No. Will you receive rent for that? No. That is what is known as notional cost. It is not relevant. Since there's no what? Cash transfers. But if the notional cost has an opportunity cost, opportunity cost, then it should have been converted as an what? How? You do your business in your own building, since that building cannot be given for third party rent. That building cannot be given to third party for rent. That's why you are doing a business in your own building. Let's say still you are doing the business where in your own building, but at the same time that building can be given third party for rent for 50,000 rupees. If you do your business in your own building, you're going to forego what? That 50,000. That is what? Opportunity cost. Opportunity cost is always what? Relevant cost. That is my opinion with regard to the what? Notional cost. Based on my research and all. But what your study text says what? Not only that, they say what? Entire non-cash transaction. Best example what Priyanka said. Depreciations. There's no cash involved. There's no cash involvement. Therefore, notional cost is what? Always what? Irrelevant or non-relevant cost. Depreciations. But what I am telling is, if the notional cost has an opportunity cost, if the notional cost has an what? Opportunity cost, then that is what? Relevant cost. That is what I have proved through the what previous example. With regard to the what? Building rate. Building rate. Are you all with me? The guys who have joined through the online? I hope you understood what is meant by notional cost. But for the time being, you say what notional cost best example is what? Depreciation. That is what they have given where in your past papers as well as what your study text. Right. So these are the example with regard to the what? Irrelevant or non-relevant costs. Clear? We only discussed about the what? Example. Now we are going to talk about relevant cost of material, relevant cost of what? Labor. Then the relevant cost of fixed overhead, variable overhead. Those part are very straightforward. You can go through that part. Only the complicated thing is what? Relevant cost of material and what? Labor. Labor. Do you have any questions? If you do not have any questions, I can get started with the what? Relevant cost of material, or some people call it as relevant cost for material. Any questions from the online? Relevant cost of material. There are 4 situations. Situation number 1, situation number 2, situation number 3, situation number 4. How many situations? There are 4 situations. Only from situation number 3, there are 3 options. Option number 1, option number 2, option number 3. Situation number 4, there are two options. Option number 1 and option number 2. Right? Shall I proceed one by one? Right. First situation. Situation number 1. Situation number 1. You need to get the material from your supplier where you don't have material to produce a product. As a new consequence, say for an example, you are running a bakery. You are running a bakery, right? This is your store. You got an order for 100 cakes. 100 cakes. To make cake, you need a wheat flour of, let's say, 100 kilograms. How many kilograms? 100 kilograms. You check the what your store. Store says they don't have material. Is that clear? Therefore, you will have to buy the material from what? Your supplier. Therefore, what is the relevant cost? Purchase price. The correct name is replacement cost. Or you can also call it as what? Market price. Is a relevant cost. Let's say the purchase price is what? $10 per kilo. Then 100 kilo times $10 per kilo, which is what? $1,000 as a what? Relevant cost. Is that clear? The first situation, you need material. Material is not available. Therefore, you will have to buy the material from the what? Supplier. Therefore, what is the relevant cost? Purchase price or replacement cost as a relevant cost. Look at my PowerPoint even. I have clearly given relevant cost of material. First situation where the material has to be bought new as a consequence of the decision being taken. In a situations where the material has to be bought from an outside supplier because of the decision to manufacture a particular product, the relevant cost of the material would be purchase price or the replacement cost. Are you clear? Are you clear the first situation? You need material. It is not available where in the store. Therefore, you'll have to buy the material from the what? Supplier. Relevant cost is purchase price. Let's go back to the situation number 2. That's also very easy. Number 2, you got an order for 100 cake, right? You need raw material, but it's available. Wheat flour, which is available 100 kilograms where in your store. It's available. But the condition, the material which is available where in the store, frequently, they use the word of what? Frequently, or they use the word of what? Regularly used for some other product. The material which is available where in the store already, it's frequently used for what? Or regularly used for what? Other product. Maybe what? For the chocolate cake or for the fruit cake. Am I correct? Or not, sometimes for the what? Icing cake. What is available, the wheat flour where in our store is regularly used for other product. Now you tell me, can I take that material? Since that is regularly used for what other, but I need 100 kilo. You check the store, they say it's available. They say what? It's available. Then what you say? I'm going to take that material to produce what? But they say, no, you can't take. Since this material is what? Regularly used for what? Other product. Therefore, what you have to do once again? You have to buy from supply. Sorry. You have to buy from what? Supplier. For the second situation also, once again, what? Replacement cost. Or the purchase price is a relevant cost. Can you all check my notes, please, for the second situations? Clear? Right. Let's move on to the third situation. As I have told you earlier, situation number 3, there are 3 options. Right? We'll go back to the same example. Then only it's easy for you to understand. You got an order for 100 cake. Right? So to make 100 cake, your requirement is 100 kilogram of what? Wheat flour. Wheat flour. Under situation number 3, first option, you check the store, it's available. Then you will ask the second question, is it regularly used? They say what? It's not regularly used. It's not regularly used for what? Other product. Then what is your next question? Can I take that material? Can I take that material? They say what? Yes, of course you can take. But if you are going to take that material, there is an opportunity. What is the opportunity? In case if there is no this cake order, that material what is available via in the store will be sold out. Agree with me? Therefore, the first option, you have to check the what? Scrap value or residual value or what? Realizable value. All are same. Then what is the relevant cost? Scrap value is a relevant cost. Maybe you would have paid to what your supplier $10, but now the scrap value is only $2. Scrap value is only how many dollars? $2. Therefore, what is the relevant cost for this raw material? For 100 kilo, every 1 kilo, the scrap value is for $2, which is how much? 200. Are you clear? That is option number 1 under situation number 3. Let's focus on the option number 2. Right, same thing, same example. You need what? 100 kilogram of what? Wheat flour. You check the store. Store says what? It's available. Then you ask the question, is it regularly used? They said, no, it's not regularly used. It's not regularly used. Then can we take? Then he said, what? We can take. Then you will ask the question, what is the scrap value of what? Then they say, scrap value is 0. In case if that material is not going to use by anybody else, no worth of that material. It means it cannot be sold out. It cannot be sold out in the market. Nobody is what willing to buy that material. Nobody is what willing to buy that material. Scrap value is what? 0. Therefore, the relevant cost also what? 0. You can't say no, already we paid to our supplier what $1,000 for what 100 kilo. That is what sunk cost. Did you make the payment to make what butter cake? No. You paid to that 1,000 rupees to your supplier to make something else. Do you agree with me? You made that 1,000 rupees or $1,000 payment to your supplier to make something else. But that is where in the store now. If I'm not going to take that 100 kilogram from the what? Store, you will have to throw it out. Oh, there is no use of what? That material. Therefore, relevant cost is what? In other words, scrap value is what? 0. Therefore, the relevant cost is also what? 0. But if somebody asks from you, what is the material cost for that wheat flour? That is also 0. You can't say, no, I already made a payment to what my supplier, what 1,000 rupees. 1,000 rupees you made a payment not to make a butter cake. But you don't go for that extent. You don't go for that extent. Just try to remember the relevant cost is what? 0. That is the option number 2. Option number 3. Option number 3. That is applicable not for the what this type of item. It is applicable item like chemical. I said what? The Panadol example. Panadol example. Sorry, paracetamol example. Paracetamol example. So you bought a chemical. You bought a chemical to make what? Paracetamol. It is where in the store. Now there is no market demand for what? Paracetamol. Now that material, sorry, that chemical will get what? Expire. Now you'll have to what? Dispose that one. By using that chemical for the new tablets, that dispose cost would be what? Saved. That we call it as what? Relevant revenue for the company. Which we call it as what? Dispose cost. Excuse me. I went through one past papers questions where in the schema, I believe. I'm not quite sure. They have given both scrap value and the what? Dispose. That won't happen practically. As long as if you have a scrap value, why are you going to dispose? I'm asking you. Excuse me. As long as if you have a scrap value, if you are able to sell that material to the what third party by, getting some sort of an income, why do you want to go for a what? Dispose. Therefore, it should be either what? Scrap value or what? Dispose. If it is a scrap value, relevant cost. If it is a dispose cost, it is a what? Relevant. Are you clear? Are you clear? Dispose cost na relevant revenue for the company. Scrap value na relevant cost for the company. Then you think scrap value na we are getting income. No? We are not going to get income. But using that material, we are going to forgo what that scrap value. We are finding what is the what cost that we are what sacrifice. Are you with me? Sure. I don't think that you are not in a state of mind. You are not in a state of mind. I know, I can understand from your face. One reason that you got late. How about others online? Are you all okay? I just want to get the reply from everyone. Don't leave a message as a courtesy of saying what yes. Very complicated task this is. Emily, how about you? Arokia? Only 3 or 4 people are just leaving the messages. Umar, Malavika, Srivatsa, and sometime who? One more girl. I forgot your name. You used to get what correct answer for all the questions. So yes, of course, Sanjana. I don't know anyone faces. The people who are joining were through online. They'll know my faces. Right, okay. Clear? Shall we move on to the situation number 4? Right. Situation number 4. As I said, you are having 2 options. Option 1, option 2. Very interesting. This is the place where the examiner is more interested to test you. Why? This is the hardest part out of the whole. Right? Just have a look. You need 100 kilogram of material, raw material. That is your requirement to produce a what? Cake. To produce a what? Cake. right? You check the store. Store says, yes, we have 100 kilo. We have 100 kilo. Then you will ask the second question, is it regularly used? If they say regularly used, it comes with the situation number 2. But now they are saying it's not regularly used. Then you can take that material. If you are going to take that material, then you will check the what first scrap value. Do you agree with me? Let's say scrap value is $3 per kilo. Then the $300. That is the one option. Another option, if you are going to take that material to make what cake, this material what is available in the store can also be used as a substitute material for another product. If you are going to use this material, you are going to forgo 2 options. You are going to forgo what? 2 options. One option is what? Very clear, which is about scrap value. One option is what? It's very clear, scrap value. Another option, this material, right, can also be used as a substitute material for the what? Other product. If you are able to use as a substitute material for other product, will you buy that material? So I'll put it this way, the example, right? Practical example, then you will understand. Let's say currently you are going to make butter cake. Your current requirement is what? Butter cake, right? Then the 100 kilogram, what is available via in your store, right? Wheat flour. We'll take a common raw material as a wheat flour. The company generally they are making let's take another, not the wheat flour. We'll take a butter. It's easy for you to understand, right? Let's take this is, you need 100 kilogram of what? Butter, right? Currently, you are making fruit cake by using this butter, right? And you are making chocolate cake by using butter oil. You're using what? Oil, not the butter. Not the butter. You are using what? Oil. Now the new order is what? Butter cake. This bakery currently making 3 products. One is a butter cake by using what? Butter or anything. They can use what? Anything. Second one is fruit cake. Desperately, butter cake is needed for fruit cake. But for the chocolate cake, they can use anything. But currently, they are making the chocolate cake by using what? Oil. Clear? Now, look at very carefully. You got a new order for butter cake. You need 100 kg. 100 kg, right? You check the store. They say what? It's available. Butter 100 kg is what? Available. Now they say what? You will ask the question, is it regularly used? They say what? It's not regular. Since it is not regularly used, you will try to take what? That material. Butter. If you're going to take, one option is what? Option number 1, scrap value. Do you agree with me? So this scrap value, let's say $3, then 100 times 3 is how much? Total scrap value. 300. Is that understandable? Or this butter, if you're not going to take, this butter can also be used as a substitute of what? Oil to make what? Chocolate cake. You got my point. If that is possible, will you buy oil? If you can use a butter to make what? Chocolate cake instead of what? Oil, will you buy what? Oil? Not buying oil, we call it as value in use. Not buying what? oil, we call it as what? Value in use. Let's say same quantity. Let's assume the same quantity. 100. The rate is $5. Therefore, $500. If you take this butter to make a butter cake, you are going to forgo two options. One option is what? Scrap value, which is how much? $300. Another option is what? Value in use. What is meant by value in use? The existing material can also be used. Company, they can do anything. That butter can also be used as a substitute material of what? Oil to make what? Chocolate cake. If that is the case, they are not going to buy the what? Chocolate cake. Not buying chocolate cake, we call, sorry, not buying the oil, we call it as what? Value in use. That is how much? 500. Now we got a two option. What is the relevant cost? Out of these two options, what is the higher? What is the higher? Whether scrap value is high amount or what? Value in use. If the value in use is high amount, that is the relevant cost. The scrap value is high amount, that is the relevant cost. Is that understandable? Is that understandable? Can you go back and check my situation number 4 where in my PowerPoint, summarize PowerPoint? Just check the situation number 4. Under a situation like this, if the material was used to manufacture the new product, it would be necessary to forego two options. Am I correct? One is what? Scrap value. Another one is what? Value in use. Using as a substitute or selling outside. Correct? Therefore, the relevant cost of this situation would again become the opportunity cost, which is the benefit foregone of the second best alternative. If the material already in store was to be used as a substitute material for another product, the amount saved by not buying the original material for that product would be referred to as what? Value in use. Under consideration, thus for the situations such as these, opportunity cost of the material in store, which would be the relevant cost of the material, can be calculated higher up value in use or scrap value. That's the reason I told you it's a more summarized one, my notes. I created myself those notes. Clear? Shall we do one small question? But value in use we are having, but I went through the couple of past papers questions. They won't directly give you the value in use. Sometimes they say, let's say this butter, oil and the butter is there now. They say 1 kilo of butter equals to 2 kilogram of what? Oil. Then how many kilogram you are supposed to buy? 200 oil, 200 kilogram of oil you are not going to buy. 1 equal to 1, no problem. Am I correct? That is the one problem. Sometimes they won't give you the what? Equal basis to calculate the value. Second problem, if you are using a substitute material, sometimes you are supposed to do the modifications. Because to bring it the same quality, you are supposed to do what? Some sort of a what? Modification. Then how to calculate modification? Take down value in use equal. It's a very important point. Value in use equal Purchase cost of second material. Purchase cost of second material minus modification cost of first material. Modification cost of what? Second material. Right? So we will go step by step for the questions under materials. Still, we are supposed to do the labor also. So, is it modification cost of first material? No, Srivasta, the purchase cost of the second material minus modification cost of what? First material. Modification cost of first. Can you all just try the question what I have given? Answers also has been attached. Just have a look in my PowerPoint itself. So I have included all four situations through one questions. Question number 1. No, that is very straightforward questions. You just try that questions as well, please. Just have a look, I will explain, no worries. Just have a look, I will explain. Look at the questions I will explain to you. APLC got a new contract which requires the following. Material A. Requirement is because the relevant cost should have been calculated always for the requirement. Don't forget, right? A, what is the requirement? A, 1000 kilograms is the requirement. Currently available in stock 700. Stock 700, correct? Another 300, of course, you have to buy from outside. Do you agree with me? Another 300, whether you like it or not, you have to buy from what? Outside. That is the situation number 1. Agree with me. 300 kilograms to be bought from outside at a price of how much? Purchase price? $100. Correct? 300 times 100, which is what? 3,000. 30,000, no? $30,000. Clear? Therefore, this is what situation number 1. Situation number 1. Correct? Now, let's check the relevant cost for what is available where in our store 700. Look at what they have given additional information. Material A is what regularly used by the contract. Since this material is regularly used for the what other contract, can we take this 700? Once again, A requirement is 1000 kilogram. A requirement is how much? 1000 kilogram. Out of 1000 kilograms, 700 is already available in our store. Therefore, another 300, of course, we'll have to buy from outside. That is our purchase price at a rate of what? $100. Therefore, how much? 30,000. The item which is available 700, what they say, look at the later part of the question, right? Material A is regularly used by the contract. Since that is what regularly used by the contract, can we take that 700? No. Therefore, that 700 also we'll have to buy from outside. Therefore, here, this 700 also we'll have to buy from outside. 100. This is what situation number 2. Correct? Which is how much? 70,000. Altogether, how much? 100,000. Is that understandable? This is the one way of getting the answer. There's another way of getting the answer for same A. Since that material is completely what regularly used, all 1,000 kilograms should have been bought from what? Outside. 10,000 times what? $100, which is what? 100,000. That's also correct. Online, are you all clear? Online student, are you all clear? There are two ways of what getting the answers. You can break it. Yeah. Yeah, available. No, they say what? Look at that question. The later part of the question. Material A is regularly used by the other contract. Since it is regularly used for other product, can we take that material? Look at the situation number 2, what it says. My situation number 2. It is available, but it's what regularly used by the firm. Since it is regularly used for other contract, can we take that material? We can't take. Therefore, once again, we have to buy from what? Outside. Oh, if wherever you are getting the word regularly used, that stock cannot be what taken to the new product, new project. Right. Let's talk about B. B. If you look at B, what is the requirement? Requirement is what? 500. That is the requirement. How much is available? All 500 is available. All 500 is what? Available. Let's go back to the question. Material B and C are what? Unique material, and they have no other usage. Then we can take that material. Do you agree with me? B, it's available behind the store. They have what? Any other usage, but we can take that material. If you are going to take that material, we are going to forego what? Scrap value. What is the scrap value of that material? $20. Am I correct? Therefore, 500 times 20, which is how much? 10,000. $10,000. Completely what? Situation number 3. Scrap value option number 1. Agree with me? Agree with me? See how we are connecting each and every question with the situation. This is a very basic question that I have wrote, right? Shall we talk about question number, sorry, type material C? See what is the requirement? 400 is the requirement, correct? How much is available? 500, sorry, 500 kilo is what? Available, not a problem. Let's go back to the question. C, B and C are what? Unique material, and they have no what? Any other usage. But this C, do they have a scrap value? Do they have a scrap value? If they have a scrap value, that is a relevant cost. Am I correct? Since they have no what? Any other usage. But here they say what? There will be a what? Dispose cost. Dispose what? Cost. How much the dispose cost? $30. If you are going to take that material to what new production, you are going to save what? That dispose cost. Agree with me? Therefore, 400 times 30, which is how much? 12,000. That is what? Relevant revenue for the company. So all these are what? Cost. This is what? Revenue. If you want to get the net amount, it should have been put as a what? Negative. Or either way it can be done. Vice versa. So previous two we can make it as a what? Negative. This as a what? Positive. Finally, we have to get the what? Net amount. Net amount would be what? The 12,000 to be what? Waived off. For the timing, can you all try only the first question, please? Section A questions. Section A, only the first question. Question number 71. Yes, put it in the group. I will go to questions. First questions only. Yes, Malavika, your answer is correct. I hope. Don't try question number 2 because we have not yet discussed with regard to the word labor, right? From Srivatsa, option C. No, Srivatsa, wrong. C is wrong. What about here, class? Anyone who have got the answers? You want time? I can give time for the time being, but in the exam, in 2 minutes, we'll have to complete. Shall I explain? Right, okay. Umar, no Umar, wrong. UU company has been asked you to quote for a special contract. The following informations about the material needed has been given. Original cost $5. The amount what you have already bought, which is not relevant. Do you all agree with me? Sunk cost. Scrap value. Sometime it may be relevant. $0.5 per kg. Replacement cost. That's also relevant because based on the questions, it's a purchase price. $5.5. The contract requires how many kilo? Requirement is only 10 kg. Therefore, the relevant cost should have been calculated only for how many kg? 10 kg. There are 250 kilograms of material in inventory, but in your store you have sufficient material. Am I correct? Since you have sufficient material, let's check whether it's regularly used or not, right? Which was purchased in era for 2 years ago, but mistakenly it was purchased. Am I correct? Therefore, since it is purchased mistakenly, it is not for the regularly use. It is not for what? Regular. We can take what? That material 10 kg. From this, we can take what? 10 kg. If you are going to take 10 kg, we are going to forego two options. Agree with me? One, we say what? Scrap value. One, we say what? Scrap value. That is how much? $0.5. 10 kg times $0.5. Then the cost is what? 5. Another option, what they say, look at, if material X is modified at a cost of what? $2. Modification cost is what? $2. It could then be used as a substitute material of Y. We can use that X is also as a substitute material of what? Y, which is the regular use, and current cost is what? $6. Now there's another options. That is what we call value in use. How to calculate value in use? Purchase cost of what? Second material, which is what? 10 kg times what? 660 minus what? Modification cost of what? First material. That is how much? 10 times 2, which is how much? 20. Therefore, 40, we call it as what? Value in use. Correct? What is the relevant cost? Out of these two options, what is the higher amount? What is the higher amount? 40 or 5? 40. Therefore, relevant cost is 40. But the challenging task, it should have been completed in 2 minutes, 2 or 3 minutes. Can be done because some of them who have got the answers we are in the online students, right? But you know, but step by step you work. You see my approach. But anyway, we will be discussing some 20 marks or 10 marks question. It will be very tough. But if you work step by step, yes, yeah. Question is situation number 4. Situation number 4. Completely situation number 4. That's why because I have explained to you originally all 4 situations. Situation number 1, situation number 2, 3 options, and the fourth 2 options. But this question completely related with which situation? Situation number 4. Now, when it comes to situation number 4, you should remember the points. One is a scrap value, another one is what? Value in use. But here also the value in use is very easy. Why? 10 kg equal to 10 kg. Sometimes they say what? 10 kg equals, because 1 kg equal to 2 kg of what? Y. Then you have to convert that one. Number of works to be done. We will deal those type of questions later. Shall we have a break? We'll have a break. Right after the break, we will get started with the labor part. Then we can move on to the some questions. Right? Malavika, that is for Malavika. You're talking about which questions, Malavika? May I drop another questions? Okay. 73, no? We'll double check. First, I'll have to teach you all the relevant cost of labor, right? All have come, no? Yeah. Right. Let's get started. Relevant cost of what? Labor. To produce a product, as we said, we need what? Labor force. We need what? Labor force. Now we are going to check. First, we already have checked with regard to the what material, how to identify the relevant costs. There are 4 situations. So each and every question we need to relate with the what situation. Same thing for the labor. Labor, there are 3 situations. There are 3 situations, right? First one, situation number 1. Does spare capacity exist? Does spare capacity exist? Right. Listen to this. Let's say currently my salary is, right, every semester my salary is 400 hours. Whether I'm lecturing 100 hours or not, my salary is for how many hours? 100 hours. That is my package. That is the agreement which I have signed with the one Aripro. Say example, Aripro. Whether I'm lecturing or not, every month or every semester, I'm supposed to be paid for how many hours? 100 hours. Let's say I have occupied only with the 60 hours every time. I'm occupied only with the how many hours? 60 hours. But I'm paid for 100 hours. Which means what? I'm idling. I'm paid for no work. If they would have given me the lectures for 100 hours, I do. But anyway, they can't give me the lectures now since there is no what? New program. There's no what? New program. Current program which is used only what? 60 hours. But I am paid for what? 100 hours. Now Aripro has a plan to start the new program which will require 40 hours. Or less than that. 40 hours or less than that or more than that. It depends on the situation. Yes, I'm audible. Priyanka, Am I audible enough? Others? Online? Priyanka, you just check your side. Priyanka, are you okay? Just check. What about others? Emily? Karishma? Malavika? I think Priyanka, only you have some problem. You can check it what your side. All the others, not a problem. Priyanka, still you are experiencing a problem of hearing the voice? Priyanka? Okay. Uh, now, currently I'm paid for 100 hours. I'm occupied with only what? 60 hours. Now they have a plan to start the what? New program, which will require a 40 hours time. Does spare capacity exist? Exist or not? Yes. Therefore, as far as the company is concerned, the cost is what? Nil. Are you clear? Are you clear? If they have a surplus capacity or spare capacity or idling, they may use a different word where in the exam, idling, surplus capacity or spare capacity. As far as the company is concerned, they are not going to make a payment to the what? Labor force. Therefore, the relevant cost is what? Zero. Clear? Right. Let's move on to the what? Situation number 2. Situation number 2. Does spare capacity exist? They say what? No. Which means I'm paid for 100 hours and I'm occupied also what? 100 hours. I'm paid for 100 hours. I'm fully occupied. I don't have what? Surplus capacity. To undertake the new lectures 40 hours, they have two options. One option, they can hire a new employee. Hire new employee at the rate, or they can ask the existing person to work what? OT, overtime. They can ask me to work as an what? Overtime. Out of those two options, they try to find out what is the cheapest option for the company. Because most of the book we have given only but hiring a new employees. But there are two options. One is for hiring a new employees. Another option is what? Overtime. Out of those two options, company should identify what is the cheapest option for the company. Clear? That is the relevant cost for the situation number 2. Clear? Cost of hiring or what? Overtime. Cost of hiring. The first one, does spare capacity exist? If you say what? No, then what? You'll have to hire. Does spare capacity exist? If you say yes, as far as the company is concerned, the cost is what? Zero. Third situation. Third situation. Currently, I'm paid for 100 hours. The whole 100 hours, I'm fully occupied. Fully occupied. Now, they are going to start a new program, which will require a 40 hours time. Let's say CMA. They'll require a 40 hours time. Then what we will do? We try to go for a second option. We're going to hire a what? New employee. But there are no lecturers behind the market. Assumption. That is the assumption. There are no lecturers available in the market. Now, what is the option that we have now? We'll have to shift the lecturers from what? ACCA to what? CMA. If you are shifting, you'll be losing the contribution from what? ACCA. Do you all agree with me? There's an opportunity cost. Therefore, what is the relevant cost? Loss of contribution from alternative product or lost contribution. Either way it can be said. Loss of contribution or lost contribution from what? Alternative or other product. Other product. Plus, you are supposed to pay what? Labor cost. Since you are going to stop that one, you won't pay what? Labor payment. If you are going to stop ACCA, are you going to make the labor payment for ACCA? No labor payment. Since you are shifting the lecturers from what? ACCA to what? CMA, there are two costs that needs to be what considered. One is what? Loss of contribution, which is the relevant cost, plus what? You have to make the what? Labor payment. These are the three situations that will reveal under labor part. Clear? Now, if you look at variable overhead, variable overhead is, of course, always in the direct proportion of what? Labor hours. Variable overhead is, please make a note on that. It's much more necessary when it comes to what? Standard costing. Put a star mark and write variable overhead payment. Yes, Priyanka, I will do. Just give me a minute. Variable overhead payment will be made same as labor hours worked. Same as labor hours worked. Variable overhead payment will be based on same as labor hours worked. Same as labor hours what? Worked. Same as labor hours worked. Excuse me, which means hours are common for variable overhead payment as well as what? Labor pay. Hours are common, but the rate is what? Different. You can't come with the what same rate, then there is no difference between what? Variable overhead and the labor. Only hours are common for what? Variable overhead. We did that part, the previous example as well. Production overhead calculations, right? Okay. Now we can get started with the questions. Before we get started with the question, yes, Priyanka. There are three situations under labor. First situation is, does spare capacity exist? Which means, let's say, I'll take my example. It's easy for you to understand. Let's say I'm paid for every semester 100 hours. I'm paid for 100 hours. Currently, I'm occupied with only what? 60 hours. I'm occupied with what? Only 60 hours. Now, Aripro has a plan to launch a new program, which is what? CMA. It will require 40 hours of management accounting. 40 hours of management accounting. Since I'm idling currently, as far as the company is concerned, the labor cost is what? Nil. That is what situation number one. Are you clear, Priyanka? If you look at the second situation, does spare capacity exist? They say what? No. Currently, I'm paid for 100 hours. At the same time, I'm occupied also what? 100 hours. In such a situation, if they wanted to go with CMA program, they'll have to hire a new lecturers, or what? They can ask me to work as a what? Overtime. Out of those two options, they try to find out what is the cheapest option for the company. That is all about what? Situation number two. Right, I have sent across another questions. It's a very, very good question, which is including the whole part. Shall we try that questions now? Which is what 20 marks questions, I believe. There are a number of components. Each and every component, we'll have to find out the what? Relevant cost. I hope you all have got the question. That question is, Question number 2 in my second PowerPoint. No? Yeah. Question number 2. Celsius Limited. Correct? Celsius Limited. I can give you 15 minutes. You try. After that, I will explain to you one by one. Right? For material, Malavika has got 100,000. It is a first X type of a material, no? Is it 100,000? Salon cost is 100,000. I don't think that's correct. I don't know. We'll double check. I don't think I'll do a small calculation myself before I put on the board. Right? You just try, because when you get a questions like this, sometimes you can see that the first part is but tough. Skip and go for the next. You got my point. No point of wasting too much of time with the what complicated part. Try to get out from the what easiest part. Then you can quickly collect the marks. Later you can focus on the what complicated if the time permits. Otherwise you will be losing the marks in the both sides. Right? Yeah. No, I don't think that 100,000 is correct, Malavika. I got a different answer. I don't know the answer, but I just did the working for that. I got a different answer. Any other answers apart from 100,000? No. Today Sanjana is not there. Okay, let's get started. Look at the question, what it says. Very good questions, that is. First one is material. Only one type of material being given, right? Therefore, it's easy. Material. Material. Right? Look at this is the way of attempting the questions behind the exam. I'll guide you. Each unit of product A uses 1 kilogram of material X. To make product A is our product. We need X type of a raw material. Do you agree with me? X type of a raw material. Company is planning to make 1000 kilogram of what A. Output also in terms of what kilogram. Just to make you all to what easy, they have given everything what in kilogram. We are going to make what 1000, right? Each unit will require how many kilogram? 1 kilo. Therefore, how many kilogram of X which will require? How many kilogram is needed? Requirement is 1000 kilogram. Is that understandable? 1 unit will require 1 kilogram. We are going to make 1000 kilogram. Therefore, which will require how many units? Sorry, how many kilogram? 1000 kilogram. Is that understandable? Online students, is that understandable? Right. Now, question says, company already has 600 kilograms in the stock. Out of this 1000 is a requirement. 600 is what already in our stock, correct? And what is our total requirement? 1000 kilogram. 600 is already available. Another 400, of course, we have to buy from outside. Do you all agree with me? Therefore, 400 kilo we'll have to buy from outside. Every 1 kilo of the rate is how much? $100. Am I correct? Therefore, 400 times 100 which is $40,000. Is that understandable? So out of 1000, this 400 part is done. Now we let it check the relevant cost with regard to what this 600 kilograms. Do you all agree with me? What they say about this 600 kilogram? They say the scrap value of the material is $30. If you are going to take this 600 to make what product A, you are going to forego the what? Scrap value. That is the one option. Do you agree with me? Scrap value for this 600. Scrap value is how much? 600 times 30 there. Yeah, 30. Which is how much? 18,000. This is the one option. Correct? Also this 600 can also be used as a substitute material of what? Y. Just take the questions. Look at what they say. Material X can also be used as a substitute material of what? Y. But company requires 1.5 kilogram of material X to be substitute 1 kilogram of what? Y. They say 1.5 kilogram of what? X equals to 1 kilogram of what? Y. Correct? Now our available stock is what? X. How many kilogram which is available? 600 kilogram. X is available. That is equals to how many Y? 1.5 equals to 1Y. 1.5 X equals to 1Y. Then our availability is 600 kilogram of X. That is equals to how many Y? 1.5 kilogram of X equals to 1 kilogram of Y. But our available X is what? 600 kilogram. That is equals to how many Y? Very good. 400 kilogram of what? Phi. Which means the worth of that 600 kilogram is 400 kilogram of what? Y. What is the purchase cost of Y? Purchase cost of Y? $120. Therefore, 400 times 120, correct? That will give you how much? 40. But at the same time, what they say, if you are using the substitute material X instead of Y, that material should have been what? Modified. The total material should have been modified. Modification cost is how much? $20. Do you remember? Value in use equal purchase cost of the second material. That is how much? 48,000 minus modification cost of what? First material. That is how many kilo? 600 times 20, which is how much? 12,000. Therefore, 36,000 is what? Value in use. Still we didn't get the answers. Value in use. Now, what is the relevant cost? Higher of scrap value or what? Value in use. Out of these two, what is the higher amount? 36,000 is the higher amount. Therefore, the total relevant cost would be, this is out now. Scrap value is what? Out, because that is lowest. Relevant cost would be 40,000 plus what? 36,000. Altogether 76,000. Is that understandable? This 36,000 and this 40,000. The requirement is what? For whole 1000 kilo. Sanjana, not Sanjana, Malavika, are you okay? That's why I told you to work step by step. See the way I have derived the answers. Don't try to read everything at once. You will get confused. Go step by step. Excuse me. Out of the whole question, if they would have used only one sentence, excuse me, if they would have used one sentence, material currently which is available in the store is what regularly used. Only one sentence as what regularly used, your answer is correct. Since the material is regularly used, entire material has to be bought from what? Outside supplier, which is 1000 times what? 100,000. If they would have used only one word after giving whole information, but that information is not provided. That's why we went for a what? Situation number 4. What about others? Umar, Amelie? Can you all move on to the what's labor part? There are a couple of labors given to you. Just try only for the first two labor. That is what X and Y. Labor X and Y. You just finish only X and Y. I will explain. After that, we'll move on to the what other parts. Right? Malavika, any answers? Do your level best. Umar, labor exists 11,000. Have you got the same answer? Or different answer? I don't know the answer. Malavika's answers. You can access to ACC Hub now. Right. Shall we double check the answers? Malavika, who is saying y is 10,000 and x is what? 10,000. Sorry, 11,000. We'll check the answers. Labor x. Labor x. Labor x, 300 hours are required for the new contract. The requirement is 300 hours. Requirement, right? Labor X employees are limited and only 100 hours can be hired from outside. Our requirement is 300 hours, but we can hire only but 100 hours from outside. What is the labor rate? Presently, labor X are working on the another contract. The present labor rate is what? $70. Correct? Therefore, these 100 hours can be hired from outside at the rate of what? 70, which would give you what? $7,000. Correct? Now, we all need another 200 hours. Agree with me? To complete our contract, it's needed what? Another 200 hours. That, of course, we are going to take from what? Contract Z. If you are going to take from the contract Z, there will be a what? Loss contributions. Agree with me? Loss contributions. Loss contributions. We are going to take 200 hours. So here, look at the contribution. We are making $250 for every 1 unit, not 1 hour. Look at the question. Present labor rate is $70. Labor cost is what? $350. So if the labor cost is 350, every unit will require what? How many hours? Rate is 70. Labor cost 350. 350, correct? The rate is what? $70. Therefore, each unit will require 5 hours. Agree with me? Each unit will require 5 hours. For 5 hours only, you are making the contribution of how much? 250. Do you all agree with me? For 5 hours only, after using 5 hours, that 5 hours is giving you $250 contribution. Therefore, what is the per hour contribution? Per hour 5 hours contribution is 350. Therefore, per hour contribution is $350 divided by 5. $70 per hour contribution loss. Agree with me? No, 250. No, I'm sorry, not 350. 250. 250. Therefore, $50. $50 for per hour loss of contribution. Agree with me? Is that understandable? Since we are going to take what? 200 hours. 200 hours. 200 hours times what? 50, which is how much? 10,000 plus you're supposed to give the what? Labor payment. Every 1 hour rate is what? 70. Therefore, 200 times what? 70, which is how much? 14,000. Correct? Altogether, how much? 24,000 here, and here what? 7,000. Altogether, $31,000. Situation number 3. Situation number 3 under labor. Once again, just have a look. Excuse me, don't get me wrong and don't get panic with this particular chapter. This is the problem, but we have with regard to what? This chapter. What you have to do is, I'm telling you the very easiest way of what get this part done at home. Go home, go through my first theory only. Don't look at any questions. Try to understand my theory. If you can access my recording, you just watch the recording first. Don't attempt any question. Then come back to the question. Do it yourself, all the question what we did in the class without looking the answers. Don't look at the answers. Just work with me for only for this particular topic, just to make it what successful what this topic, and check the answers and see where you went wrong. Then you can rectify your mistake. That's the best way of what learning. Don't ever look the question and answer. You won't be learning. You will never learn by looking the question and answer. You go through the questions, right? And you do it yourself. Later you just check the answers what we did behind the class. So once again I'll repeat, labor X, just have a look. There are 2 ways that you can get the answer for the 200 hours. I can tell you 2 ways, both ways which would give you the same answer. Our requirement is 300 hours. But the question says only 100 hours can be hired behind the outside. So the present rate is what? 70. Therefore 100 times 70, which is what? 7,000. That is very straightforward. Another 200 hours cannot be had where in the market. But the 200 hours we are going to take from what? Another project, another product, or another contract. If we are going to take the 200 hours from what? Another project, that project or that product will be discontinued. Since it is going to discontinue, there will be a what? Loss contribution. There will be a what? Loss contribution. So how many hours? 200 hours. So loss contribution, every one unit is how much? $250. Every one unit is how much? $250. This is not 350. Every one unit is what? $250. So one unit will require 5 hours. Therefore, every 1 hour loss contribution is how much? $50. Agree with me? Since you are taking 200 hours, 200 times what? 50, which would give you the loss contribution. Loss contribution is how much? 10,000 only. Plus, for those labors, you're supposed to make the what? Labor payment. Labor cost is how much? 14,000. Then altogether, 24,000 as a what? Relevant cost for 200 hours. For 100 hours, relevant cost is what? 7,000. 7,000 plus 24,000, 31,000. Is that understandable? That's another way of getting the answer. Since a product will require 5 hours, if you are taking 200 hours, how many units will be lost? How many units will be lost? A product will require, listen very carefully, a product will require 5 hours. If you are taking 200 hours, how many units will be lost there? A product will require 5 hours. To make a 1 unit, it will require how many hours? 5 hours. Since you are taking 200 hours from the what? The project, how many units will be lost? If you are taking 200 hours, 40 units. 40 units. Agree with me? You are taking 200 hours. 1 unit will require 5 hours. Therefore, the loss of unit is what? 40. Every 1 unit loss of contribution is how much? 250. 250 times 40 is how much? Loss of contribution. 250 times 40. 10,000. Same answer. Loss of contribution. Either way can be what? Found. I'm sure that you didn't understand. Once again, I'll tell you. Just have a look. To make 1 unit, you need but 5 hours. Every 1 unit, your loss of contribution is how much? 250. Your loss of contribution is how much? 250. So that 250 contribution that you are making after spending how many hours? 5 hours. How we have got 5 hours? Total labor cost is 350. The labor rate is 70. Therefore, how many hours which is needed? 5 hours is needed. Am I correct? After giving 5 hours, you are getting the contribution of 250. Therefore, every 1 hour, your contribution is how much? 50. Since you are taking 200 hours, the loss of contribution would be every 1 hour 50. Therefore, 250 times what? 200, which is what? 10,000 is what? Loss contribution. Loss contribution. Loss contribution is what? 10,000. Or you have another option of getting what? The 10,000. Since you are taking 200 hours, every unit will require 5 hours. Loss contribution, loss unit would be what? 40 units. Agree with me? Every 1 unit contribution loss is 250. 40 times 250, that would give you once again 10,000. Both would give you the same answer at the end. Clear? This is the total calculation with regard to what? Labor X. Are you clear? Malavika, are you all okay? Karishma? Umar? I don't know, Umar is there or not. Ashwa Malavika? Navya? Nisho Joel? Thank you. Okay, sure. Right. Next part of the labor is very straightforward, I believe. Labor what? Why? No? Labor why? Labor why? 200 hours of record for the new current contract. Presently, labor why employees are idling. Presently, they are what? Idling. Since they are idling, as far as the company is concerned, are they going to pay anything for them? We need how many hours? 200 hours. Agree with me? We need 200 hours. Requirement is what? 200 hours. Does spare capacity exist? Yes or no? Does spare capacity exist? Yes or no? Yes. Therefore, situation number one, what is the cost as far as the company is concerned? Cost would be what? Zero. Cost is what? Zero. Next, let's talk about what labor is it. Labor is it. Hundred hours are required for the new contract. The requirement is 100 hours. Presently, labor is that employees are working in another contract which earns a contribution of $20 per labor hours. Presently, they are working for the what? Another contract, right? They are making the contribution for every 1 hour. It's very easy for us to understand. Every 1 hour loss of contribution would be how much? $20. The present labor rate is $60 per hour. What is the current rate? 60. 75 of laborers can be hired from outside at a rate of what? 75. By additional hours, cost is how much? 50. Just to make you all to confuse, they have given that $15. What they say is, excuse me, idea is this. Currently, the laborers are paid, the labor Z are paid what? At the rate of what? 60. But if you are going to hire a new employees who are in the market, you have to go for a what? $75, which is what? $15 more than the what? Normal rate. Am I correct? But our requirement is what? 100 hours. Only 75 hours can be hired from outside. Do you agree with me? 75 hours. What is the rate? $75 per hour. Am I correct? Then 75 times 75? $5,625. Another 25 hours. We are going to take from the what? Another project. Another 25 hours. We are going to take from what? Another contract. Since we are taking from another contract, there will be what? Loss contribution. 25 hours. Every 1 hour loss contribution is how much? Every 1 hour loss contribution is how much? $20. Then how much? 5,000. 5,000. Plus what? Labor cost. Plus what? Labor cost. 25 times what? 60. Am I correct? That would give you how much? 1,500. Altogether, here 6,500. Here 5,625. Then how much? How much? How much? Then how much? 500. No, I'm sorry. Therefore, I'm sorry. Thank you. Therefore, altogether 2000. Am I correct? Then 7625 is our total relevant cost. Clear? There's a bit of argument with regard to this labor cost payment for the 25 hours. I'll tell you that part also. Excuse me. Based on the opportunity cost perspective, some people say this $60, sorry, $60 should have been calculated for 25 hours. Some says it's not 60, it should have been used as a what? 75 as a what? Present rate. Both are acceptable. Both are acceptable, right? 25 times 60 over 25 times what? 75. 25 times what? 75. Both, I think both can be given the marks, because you know why? Since you are transferring from the existing work, currently we are going to make a payment for them only what? That 60. But the opportunity cost perspective, the market rate is what? 75. Therefore, this 25, either you can use what? 60 or what? 75. Then there will be a different $15 for 25. Then the total relevant cost would be what? Slight different. It would give you what? 8,000. It depends. But I would say what? 60. You know the reason why? Currently, the labor force which we are taking from the another contract, they are paid only what? 60. They are paid only what? 60. Only for the new employees, which would be paid as what? 75. Correct? Next one is what? Management time. Management time. Ten hours of management time is required. Management is paid $100 per hour. Management presently has a sufficient time to utilize the product A. Does spare capacity exist? So we are expecting to get what? 10 hours, right? Does spare capacity exist? Yes or no? Yes. Therefore, as far as the company is concerned, the cost is what? 0. Management time. Do you agree with me? Is that understandable? Last one is what? Variable overhead payment. Variable overhead payment. So as I have clearly explained to you, variable overhead payment will be based on what? Same as what? Labor hours. Look at the three types of a labor hours. Labor X, 300 hours. Am I correct? Plus next one is what? Y, 200 hours. Next one is Z, how many hours? 100 hours. Last one is what? Management time, 10 hours. Management time, 10 hours. Altogether 500, 610 hours. 610 hours. For this, we are making the payment at a rate of what? $40. Then what is the total variable overhead cost, relevant cost? The last one, fixed overhead, is what? Not relevant. That is what? General fixed overhead. Any questions, please ask. I can explain to you all. Any questions? Are you all okay? Now, shall we go back to the question what we have taken from the exam Kaplan, there are 5 questions. You took the snapshot. Am I correct? Yeah, out of 5, we did only 1 questions, no? Now let's focus on the remaining 4 questions. Malavika, she has got. Yes, Malavika, that is correct. I believe. What about other questions? I think correct, Malavika. Do you want time or shall I start? Malavika? Two minutes. Okay. What about others? Nisho, Joel, Karishma, Emily, Arokia. No sound from you all. At least just put us a hi in your chat box. Just to check whether you are there or not. Yes, Malavika, we'll double check. One more question to be done. That is 75. What about you all? Have you all got the answers? Not yet. What about you? Have you got the answers? Thank you, Karishma. I think correct, Karishma. It's matching with what Malavika's answer, then most probably it will be correct. We'll double check anyway. Shall we start? Okay. Question number 72. Question number 72. They're talking about the labor. VV company has been asked to quote for a special contract. The contract requires 100 hours of labor. Requirement is 100 hours. However, the laborers who are each paid $15 per hour working at full capacity. They're working at what? Full capacity. There is a shortage of labor where in the market. There's a shortage of labor where in the market. The labor required to undertake this special contract would have to be taken off from the another contract Z. These 100 hours we are going to take from what? Z. Then there's a point is what? Loss of contribution or loss contribution. Agree with me? Okay. Which currently utilizes 500 hours of labor, generate 5,000 worth of what? Contribution. Now, $5,000 of contribution for how many hours? 500 hours. Therefore, the loss contribution is what? $10 per hour. If the labor was taken from contract Z, the whole of contract Z would have to be delayed. Excuse me. Very important point. They say we are not going to discontinue. They say what? If you are going to take from Z these 100 hours, only the pros of Z would be what? Delayed. We are not going to lose any what? Products over there. You got my point. Am I clear to you? Only it would be delayed. Delay would involve a penalty of only how much? 1,000. Therefore, the total relevant cost would be 100 hours. $15 we are supposed to make the payment, which is how much? 1,500 plus what? Penalty of how much? 1,000. Altogether how much? 2,500. This is not relevant because you all are correct, because the way that I have taught you, we'll have to consider the what? Loss of contribution. That is correct only when if that production is what? Discontinued. Because they say what? It will be only what? Delay. For that only we are going to incur the cost of how much? 1,000. If that point is not given, we should go with the method what you have already chosen. We will check Malavika. Question number 73. An organization is considering the cost to be incurred in respect to the special order opportunity. The order would require how many kilograms? 1,250 kilograms is a requirement. That is readily available and the regularly used by the organization. It's available, but that is what? Regularly used. Since that is regularly used, we don't read any other part of the questions. We have to buy from what? External supplier. What is the purchase cost? What is the purchase cost? Current market price is how much? $3.24. Am I correct? Therefore, 1,250 times 3.24. That would give you how much? 50. I didn't read the rest of the part where in the question. As long as I found it's regularly used, that all the other piece of information are what? Not necessary for me to get the answers. Next questions. You can say what? Since the material is what regularly used, it comes under situation number 2. Therefore, we'll have to buy from what? Outside supply. 74. In order to utilize some spare capacity, K is preparing the quotation for special order which requires 2,000 kilograms. Requirement 2000 kilograms, right? He has 800 kilogram of inventory. Original cost is what? $7 per kilogram, right? So anyway, another 1200 of course we'll have to buy, right? Another 1200 of course we'll have to buy. Material J is used in the company main product. That is what? Regularly used. That is what? Regularly used. Since that is regularly used, anything which in the stock, can we take that one? So out of this 2000 kilo, already they have how many kilo? 800. Therefore, another 1200, of course, you'll have to buy from outside at the rate of how much? $80. $80, no? Purchase price. $8. $8. This 800 also you can't take because it is regularly used for other products. Therefore, that 800 also we'll have to buy from outside. Altogether, how much? $16,000. This one comes under what situation number 1? The previous 800 comes under what situation number 2? Or what you can do is, altogether you can make it as a what? Situation number 1. Situation number 2. Since that is what regularly used, you can take it as a what? Purchase price. Right? Or because if the word examiner use the word of what regularly used, entire material what has to be bought from what? Outside supply. Replacement cost. Whether it's available, how many kilo, no problem at all. Right? Good question. The last one. A company is calculating the relevant cost of the material to be used in the particular contract. The contract requires 4,200 kilograms. Requirement is 4,200. kilograms, right? Material hatch, and this can be bought for $6.3 per kilogram. The company bought 10,000 kilogram material H as sometimes ago when it paid $4.5 per kilo. Currently 3,700 remaining only out of 4,200. We have only how many kilo? 3,700 kilo. Therefore, another 500 kilograms, of course, you have to buy from outside. Do you agree with me? What is the purchase price outside? H, this can be bought at a rate of what? $6.3. Therefore, 500 times 6.3. How much? Three? 3,150. 3,150. Correct? 3,150. Now we'll have to check the what do you call relevant cost for these 3,700. What they say, the inventory material H could be sold for $3.2. One option we have what? Scrap value. Agree with me? Which is how much? 3.2. 3,700 times 3.2. Yes. 3.2. Which is how much? 11,840. 11,840. Or this material can be used as a what? Substitute material of what? Another product. That is what we call it as value in use. Value in use. What they say, the company has no other use of material other than on this content, but it could be modified at a cost of $3.7 per and use a material cost of what? Sorry, substitute the material of what? J. The material J is regularly used by the company, can be bought for $7.5. Purchase cost of what? Second material, which is how much? $7.5 minus modification cost of what? First material, which is 3.7. The net is how much? 3.8. 3.8 value in use, correct? At the rate of how many kilograms? 3,700. How much? 14,136. 136. 14,060. 660. Correct. 14,060. Is that answer? Correct? Now, excuse me. Excuse me. Now, what is the relevant cost here? Scrap value or value in use? What is the high amount? Value in use. Therefore, this is the relevant cost. 14,060 plus what? 3,150. Altogether, how much? 17,210. Is that understandable? If you have any, because this is my third or fourth question, but still you are finding it difficult to get the answers. I'm disappointed. Only Malavika and Karishma who shared me the answers. Excuse me. When you are refer the sometime in the marking scheme or answers in the book, this part won't be there. But this 11,840 won't be there. But that should have been compared. That should have been compared with the value in use. What is the theory? Out of those two options, we need to find out what is the higher. Sometimes when you are referring the answer, only answer 14,060 or the final answer would be there altogether how much? 17,210. So we'll have to work step by step. Then only you will understand the fact. Got my point. Now let's move on to the what 120 marks questions. Past paper questions. Stay clean. Stay clean. 2009 past paper question December. Have you all got the questions? Done? Right. Can you first do me a small favor? Read the question first. First read the question. It will take about at least 5 minutes time. Try to understand the story of the question, and try to underline that you think what is important. Just try to highlight that you think which is what important. The entire question which is talking about what relevant question. So it's kind of related with the shutdown operations, right? Shutdown operations. But related with the shutdown, we will talk about the shutdown also what next class. Common short-term decision making, make or buy decision, shutdown operations and all. First, you read the questions, will you? Right? From A to Z, just try to read. Did you all read the questions? Okay, we will do it like this. We will try these questions in next class. You know why I'm telling that one? It is something related with the shutdown operation with the relevant cost. So there's another past papers question, bits and pieces. That is 2009 past paper question. Most probably, I will try to do both question in the next class, right? If the time permits. Otherwise, at least we will try to do one. We'll have to start with the common short-term decision making, right? Common short-term decision making. That's also common comes under what short-term decision making. One is after relevant cost, make or buy decisions. whether make the product in-house or buy from outside. Next one is accepting special order. Special order. SPL order means special order. Third one, shut down operations. Shut down operation. We'll talk about everything one by one. No worries. Last one is join product and further processing with the byproduct. Further processing. These are the common short-term decision making, which is almost 5 to 6% in the syllabus. But sometime it may be tested as 120 marks questions. But anyway, all these common short-term decision making, which is linked with the what? Your relevant costing. It comes under relevant costing, all these parts. Right? Let's first talk about what make or buy decision, whether make the product in-house or buy from outside. Make or buy. Right? Let's say there's a product A. There's a product called A. If you're going to make this product in-house, you will incur the direct material cost $10, direct labor cost $5, variable overhead $4, fixed OAR $3. Altogether total production cost 15, 19, 22. Correct? $22. Same product, it can be bought from outside with the same quality. Purchase price from outside, which is what, $20. The same product can be bought from outside at a rate of how much? $20. What is your opinion? What is your decision? I need answer from everyone. Are you going to make the product in-house or are you going to buy from outside? Think and tell me. Management accounting perspective, we talked about the relevant costing, everything we have discussed. Don't come up with answers blindly. Yes. What about you answer? Good. You answers. Are you going to make the product in-house or buy from outside? Most of them who have said what, purchase from outside. But Malavika who says what, in-house. Any specific reason, Malavika? Very good, Priyanka. Yeah, it should have been made by in-house. Why? Fixed cost is what not relevant for decision making. Fixed cost is what not relevant for decision making. What are the relevant costs? Total variable cost. Total variable cost is how much? $19. Therefore, the variable cost, another name is what? Marginal cost. Variable cost, another name is what? Marginal cost. If that is less than the purchase price, you will make the product what? In-house. Therefore, decision criterion, first one, marginal cost, or another name is total variable cost. If that is less than what? Purchase price, decision would be make in-house. Right? But your answer is correct only when that fixed cost is what? Fixed cost. Specific fixed cost. Sometimes they may give you the specific fixed cost. Then the decision criteria may get what? Change. How? marginal cost plus what? Specific fixed cost will be compared with what? Purchase price, then make in house. Correct? Sometime this is applicable only when if you are working with a spare capacity. If you are working with the what? Spare capacity. Sometimes we are working with no spare capacity. What is exactly meant by no spare capacity? To make the product in-house, we don't have a capacity. Currently, all the resources are fully utilized or occupied with the existing product. If you are going to make new product via in-house, you will be losing a what? Contribution from what? Existing product. Now, if that is the case, our decision criteria will get changed. Marginal cost plus what? Specific fixed cost plus what? Loss contribution from alternative product. Alternative product. If that is less than purchase price, make in-house. Is that understandable? Is that understandable with the no spare capacity? Is that understandable? No spare capacity. Right, okay. If you do not have a spare capacity where in your company, currently you are occupied with the what? Your existing operations. If you are going to undertake this product A, on the other side, you have to sacrifice another product. Then only you can produce a what? New product. If you are going to sacrifice another product, you will be losing a what? Contributions. There will be a loss of what? Contribution. That is always what? Relevant cost. Opportunity cost is what? Always relevant cost. Therefore, what is the, the total relevant cost? Your product marginal cost, which is what? Total variable cost. Marginal cost, another name is what? Total variable cost. If there are any specific fixed cost, that also needs to be what? Added. Correct? Then if there is a what? Loss of what? Contribution, that also should have been taken to the account. That will be compared with what? Your purchase price. If that is less than that, you can make the product in-house. If that is more than that, you have to buy from outside. Clear? I don't know whether I have included one questions. The PowerPoint what he has shared is there. That do you remember the PowerPoint with regard to the relevant costing? There's a question number 2. Question number 1 is very straightforward. Can you, if you want, very good question. Can you access that question? Question number 2 from the PowerPoint what he has shared in the morning. There's a question number 2 on the make or buy decision. Can you try that question, please? Right. Shall we discuss? Can you read the questions? I will explain to you. Come on, read somebody. Excuse me. What they say is, it's not a one unit. If you're going to manufacture or buy from outside, it should have been done in the form of what? Batches. So if you're going to purchase from outside, you'll have to buy 10,000, right? 10,000 at the rate of $65 per unit, therefore $650,000. Is that understandable? Purchase price? Is that understandable? Right, go ahead. Excuse me. At the same time, they say, but if you're going to manufacture the same product but in-house, marginal cost is how much? 47.5. Now 100,000 for 10,000 times 47.5, which is how much? 475,000. If you are going to take a decision based on only these two pieces of information, what would you do? Make in house. Why? That is what cheapest than the what? Buy from outside. But at the same time, this is the situation number 3. Do you remember that? If no spare capacity exists, this is what you ask. Let's go ahead. Excuse me. What they say is, you can make in-house. But if you're going to make in-house, another production will be reduced by how much? 1,000 units. That is what is known as relevant cost loss, opportunity cost loss of contribution. So each unit, the selling price is what? 800. Variable cost is what? 600. Therefore, the total loss of contribution is how much? 200,000. The total relevant cost is how much? 675,000 will be compared with 650,000. Therefore, what would be the best option? Purchase from outside. Therefore, conclusion, purchase from outside. Is that understandable, Malavika? That's all for the day. Any questions before we wind up the sessions? Shall we wind up the sessions? Okay. Thank you very much. See you on what next Tuesday. You will be having class continuously for 2 weeks from Tuesday onwards. No classes until next Monday. So we'll be taking the class from Tuesday. Tuesday continuously we are having for 2 weeks. Yeah, then we are done.